Hello and welcome to this week's Australian Stock Market Report. Now this week we're going to look at financial influencers and the new ASIC crackdown on this space. Then we'll get into the Australian stock market so I can share with you my thoughts on where it's heading, along with answering your questions and looking at stocks for you. I'm Gillham, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Now before we move on, thank you for showing your support for our channel and hitting that subscribe button. Now remember, as you subscribe, click that bell on the right of it so you keep up to date with our latest videos. Also remember to tune into our live Australian stock market show, which is on every Tuesday, 7 to 8 p.m. Australian Eastern Time. Now this is the show where you get to ask us, the stock market education and trading experts, to look at your favourite stocks and answer all of your most burning questions. Now, if you type the word stock market into your browser, you will literally get millions of hits, some of which have good, valid information, whilst others are misleading and in some cases fraught with danger. Now, whilst the incidence of misleading information and education in the financial space is not new, social media giants have made it very easy for anyone to become a financial influencer. Remember, more people that consume the content, the more money the social media giants make, and given their lack of care or action, ASIC has increasingly been targeting this area in order to protect Australians. This is because the way investors now access information has changed significantly, and as such, ASIC recently announced it would tighten the restraints on those who talk about money and investing if they are unlicensed. In essence, they are putting social media financial influencers, or finfluencers, on notice that if they cross the line into financial advice, they will face heavy fines or even prison. Unfortunately, many of these finfluencers have very little understanding of the law when it relates to financial advice and are walking a fine line because ASIC is monitoring this space and they will get caught. While some finfluencers do provide good information, there are too many providing misleading information. And with 33% of 18 to 21-year-olds following at least one financial influencer in 2021, according to ASIC, the potential for serious damage to the younger generation is really high. Now, in the last few years, with lockdowns due to COVID-19, there has been significant rise in finfluencers, and the younger generation have been getting into the stock market as well as other investments without the proper knowledge or advice. Sadly, this is causing a lot of damage, so I support the ASIC crackdown in this area, and I urge social media giants to do the same. Now it's time we take a look at the market, so let's get into what were the worst and best performing sectors this week in the market. Now the best performing sectors include healthcare and utilities, with both of them up over 3%, followed by industrials, which is up over 1%. Now the worst performing sectors include information technology and materials, as they are both down over 2%, followed by communication services, which is just in the red for this week. The best performers in the S&P ASX Top 100 stocks, they include Ramsay Health Care up over 28% after a consortium of investors that include the global giant KKR launched a takeover bid for the company. Now Challenger was also up over 8%, whilst Brambles was up over 7% for the week. The worst performing stocks included a Block, and that was down 7%, followed by Evolution Mining and Iluka Resources, which were both down over 6%, followed by BHP and Rio Tinto down over 3% for the week. Now before moving on, if you are listening to this recording on your favourite podcasting app, then please give us a 5-star review. So what do I expect in the market moving forward? Well, let's get into the charts for our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me. Well, what an interesting week it's been this week. We're up earlier in the week. We started falling away towards midweek. It was only 4 days. Obviously, we had Monday off with Easter, so it's Tuesday, Wednesday, Thursday. And I've just downloaded or got all my data downloaded for Friday while I've been recording the earlier part of this market report. So those numbers that I quoted a little bit earlier for the best and worst performing stocks, and obviously the best performing sectors and worst performing sectors. That was with Thursday's data, so please excuse me if those figures are just slightly different than what you might see if you're watching this on Monday or on Monday the 25th, which is Anzac Day. So I do hope you're having a fantastic Anzac Day and and showing the respect for those people that sacrificed their lives for our freedom. So, but now let's get into the All Ordinaries Index chart so I can actually look at what happened, because Friday, or the day that I'm sitting here doing this recording, because it's Friday afternoon, I'm doing it after markets closed now, we had a meltdown a bit today. So let's go and have a look at the chart to see what's going on. Now I'm sure if you look at the screen, normally on is the monthly chart, which is what is there, and on the right hand side is the weekly chart. Now I can guarantee you Friday night and Saturday you probably hear journalists or the media or your favourite TV show talking about how devastating Friday was and the market fell heavily on Friday, and I'll show you, and it's not really that, it's not really that scary to me, but if I look at that, you can see that, I've just done the wrong tool. Let me go and put that on. So from the open there on Friday through to the low, the market was down 1.78%, closed down 1.5%. So it is a big move on a daily basis, because if I open up the chart, you'll see how many moves are that big. And if I look at it compared to this move here, where the market was down 1.2 in one day and closed down 0.6, it is a bit more different move, being down 1.5% in the day, and you can see all green here. But looking back here, this date here is what we're talking about, February this year, so not too long ago. If we look at that, and we can see they're 2.95%, so it's not abnormal for our market to fall a great distance. Going back a little bit earlier into January, let's have a look at a couple there. So what I'm trying to do is make this pretty normal. 2.79% on that day in January. This one here is 2.3 on another day in January, and here we have another one, so 2.6, and let me do one more. Let's put that one down. There's 1.84, so there's 1, 2, 3, 4 times in January. And I'm not even going to do these, a couple of these ones through here, but there'll be more in there. But you can see how 1.5% is not abnormal. It's nothing to be worried about, and media like to create a sensational, some sensation around these things. I don't want to go in and try and get rid of all that. Let's go back to the weekly chart and see where we're at. Looking at this, we can see this week, I'll just get rid of that percentage on there so you can see it a little bit easy. You can see this week we've made a new high. We pushed right up, and this is the all-time high at the moment in the market at 7956 points. So we got pretty close. Now, what happens when you get near an all-time high? We're nearly less than 0.5% away from making the all-time high this week. August is still the highest close we've seen on a weekly basis. That close there at 7,897 points that I said is quite a significant level. We still haven't had a higher close than that, even through these few weeks. Generally, when you see a stock or market near an all-time high, like we made a new all-time high here, is you either get one or two things happening. And Janine and I did talk about this a little while. And I remember when I drew this green wavy line through here a few weeks back, and you might want to go and visit that recording again. I said there's one or two things are going to happen. One is we're just going to blow straight through that previous all-time high and run up to 8,200, or we're going to come back a bit and then move up before we come down into our next low mid-year sometime. It looks like it's going to be more like we're going to pull back a little bit now after Friday, but hey, we did make a high this week, and it's technically an up bar. So next week we could see the move up, and you probably heard me say it a few times, the current market conditions that we've had the last couple of years with COVID, you've got to expect the unexpected. It really is going to be like that, and a lot of investors that are out there that are uneducated are struggling a little bit with this market being so sideways, if that makes sense. There's a lot of stocks that are giving false triggers, things that are happening, and it will settle down eventually. But the economy and the market at the moment, that all this is telling me is the big end of town a little bit, I won't say nervous, but they're being more conservative depending on what's going around the world, because obviously there's interest rates, concerns around interest rates, especially in the US. The inflation in the US is gone up high, but inflation in Australia is not that high. It has gone up a little bit. Obviously, costs of goods, fuel and food and things like that have gone up, but it's not super high inflation, still in relative normal areas. But obviously interest rates are going up in Australia. They talk about 4 to even 5 interest rate rises, but we're on historical lows. So even if they do 2, 3 or 4 interest rate rises, we're still below, or we'll still be below historical norms for interest rates. So at this point in time, I don't want to get too much into the economics of the thing, but at the moment, our market still does look quite good. No reason to panic at the moment. We may see a week down or a couple of weeks down through here. We may get down to that 7,600 points, that level that I was talking about a few weeks ago, that it is possible for our market to fall down to. Right now, as I said, it's really time to be patient, really, really patient, because, as I said, we might get another down week or couple of down weeks coming down to that 7,600 and then move up for a few weeks, break through a new all-time high. But it wouldn't half surprise me if we'd have a complete turnaround on Monday or next week. Not Monday, because Monday the market's closed with Anzac Day, but move up strongly next week and break through that all-time high. If we do that, then I think that'll break the shackles and we'll start seeing a lot more money coming into the market, because a lot of people do sit at these levels. And what you'll see there, if I draw a horizontal line just to finish up on this report, you'll see a lot of people sit there with buy orders above these sorts of levels. And once they move through market or stock move strongly, you'll see this uptake of a lot of orders that are sitting there ready to buy. And you'll see this move up and it'll accelerate. And all of a sudden it'll exhaust and stop. And then it'll come right back down again for a week or two. And it hit its head on these levels before going off again. So at the moment, again, as I said, to me, it's an each way bet. And I know that's really hard for some people to take, so they'll just make a decision which way the market's going. And as a professional trader, an investor and an educator, to me, I've always got both sides of it covered. I know what I'm going to do if the market falls, and I certainly know what I'm going to do if the market rises. And you should too, because it's no use just looking at one side. And I know, so many people tell me they know how to buy. They do. They constantly say, I know how to buy. But when I say, do you know how to sell? And I'm not talking about hitting the sell button on a broking platform. I'm talking about when is the right time to sell, the most appropriate time to sell. And if you've been watching our YouTube videos long enough and our live show long enough, you'll notice that most people don't know when the right time is to sell. But what do you think is most important, knowing when to buy or when to sell? And I'm sure you know the answer to that, and it's generally to sell. And so what do you think is the most important thing to learn? And that is and protecting your money, because when your money's on the line in the market, the market has control of that. All you can do is decide whether you're going to stay in the market or sell. And a lot of people don't understand how to sell and when's the right time to sell. And this is so constant, yet it's so easy to learn when you put the time and effort in, and it is really, really worth the time and effort. I only got an email the other day from somebody who's started our beginner course, which is like less than $2,000. So it's a no-brainer to me that everybody should at least do that. And they said, since I've done your course, I'm making so much more money, and your course has paid for itself before I've even finished it. And now I'm really much more confident on the marketplace. And for $2,000, it's not a lot of money. And it will put you instead to make a lot more money. It'll pay for itself quite easily. So maybe you should ponder that over the next week and see what happens with the market. But right now, as I said, nothing to panic about at the market, or I don't see anything to panic about. And next week, if the market is up, we should break through the all-time high. But wouldn't be surprised to see it go down for 1 or 2 more weeks into that sort of 7,600 points. But that's it for me. Let's get into your questions for us. Our first email is from Kim, who says, great show. What's the outlook for A2 milk share? Now, we also have a question on A2 milk from somebody called One Life, who says, hi Janine, I just bought A2 milk a year ago at $10.05. Please tell me, should I keep it or book a loss? I don't mind to keep it for a longer run. Is it wise to hold up or not? I will appreciate your golden views on this. So we'll go and look at A2 milk and answer both of those questions, because they're pretty similar, aren't they? So we'll go and have a look at the chart right now. Now on your screen on the left is A2 milk monthly chart, and on the right is the A2 milk weekly chart. And you can see here that A2 milk is pretty much going south, and I'm not sure why you would have bought it. And this is probably really evidence of why Janine and I did the show, our live show, a couple of weeks ago, and say people quite often will catch falling knives by buying in the stocks in these little runs up, not knowing it hasn't stopped falling. So really, obviously The second email was about buying it around $10 something right about here. And again, it was very much in a downtrend here, and very much it was a really high risk place to buy it. So all I can see right now is this stock is falling further. And you can see here, if I go back to the whole history, how far it's fallen. And a lot of people would have bought it on this move down around here thinking it was cheap, because it was up around about $20. And for a long time, this was the market darling. It really was. Everybody wanted A2 milk because of the stellar rise. But trying to get into something because it's cheap is not a wise move. And right now, I'm not going to tell you to sell or to sell this stock, but you should have had a stop loss or an exit strategy in, and I would have sold that early, way early, if you'd bought in around $10. Right now, it's not a stock I'd be entering into it, not a stock I would be holding. So you need to determine yourself whether you would continue to hold this stock and wait for the longer term. It's a great company, A2 Milk, but the financials and everything right now is not really pointing to a stock that's got potential in that short term, possible medium term. I just want to have a quick look at something, and I'll just bring that up just to show you how far it's fallen. So that's $20.05 at its all-time high price. So now it's traded below 75% of that. So when a stock does generally do that, it generally will head down to around 90% into that sort of bracket. So right now, all I can see is further falls on this stock. And I really... I don't want to be negative about this in terms of why you bought and et cetera, but we do. This really highlights why we need to have rules around buying and selling, not just buying. And too many people buy thinking something's cheap, and they go, okay, well, it eventually will come back what I paid for it, and move on because it's a good company. And all companies come up or will come back, and that's not always the case. And at the end of the day, it's what you do not lose determines how much you make. And that's what we talk about all the time, whether it's on our live shows or in my books, about people making sure that when you do enter, you do have an exit strategy using stop losses. And if you'd used a 15% stop loss on a $10 buy, that means you would have been out at $8.50. And how much better off would you be right now? Plus, you would have had that money to go into a stock that's going up. And I'm sure if I ask you, would you rather be in a stock that's going this way or this way, I'm sure you're going to tell me you'd like to be in a stock going that way, which everybody would. So just be mindful that you do need to have a strategy for entry and exit. But right now, no good news on A2 Milk. I really am sorry about that. It does look like it's going to be bearish for quite some time at the moment. Anyway, let's move on to our next question. This one is from Chris, who says, great show as always. Could you please give me your thoughts on Xero? Seems like it could be a good buying opportunity in the near future. So let's go and have a look at Xero. It's another stock that I really like, and it's a great stock, but it has not necessarily done so well of late. Let's bring it up on the chart, and you can see here what we're talking about here. You can see again, it's another stock that's been fallen quite heavily. The all-time high there is in December 2020. It moved down to that low there in March 2021. Couldn't make it through here. It's a real telltale signal. If it can't make it through that previous all-time high, it starts falling away. This is in a bad run. So this is not an opportunity right now. I'll make it straight out. It is not an opportunity. It is a stock that is falling, and we can see here now. I'm recording this on Friday afternoon after the market's close, and I believe, let me just check that the data for Friday is in this at the moment, because Monday is a public holiday. And you can see here, Friday, 22nd of April, I'm recording that late in the afternoon. You can see here it's fallen away. Let me just go back to the weekly chart. This is a stock that's just had a bit of a rise up recently, I believe, just as... what happens here is sellers just slow down. They're selling through. It's not necessarily more buyers are coming into the market. And there's a couple of reasons you can see here, or a couple of telltale signals is. One, you're looking at these bars. See, this green bar went higher, but it closed lower. This one pushed up, closed lower. And then we've got a red bar here, and then obviously this current week it's sort of pushed up, can't do that. So at the moment, if it can't find support above that level there at $90.15, then this thing will go a lot further south. And so technology is a little bit on the nose. A lot of the US technology stocks are falling quite heavily, and I think that's affecting the Australian technology sector. And whilst I do like this company, I do think it's a well-managed company. It's got really steady cash flows because it's in the accounting space with its software. Right now, the market doesn't like it, and the sellers are out. So if I put the same tool on there, you can see the difference between this one and the other one. It's fallen, if I drag that back over there, you can see it's fallen about 38% of its all-time high. That's its big support level, $78.99, so $79. If it does fall below that and it gets to this level, it may find support. But again, the operative word is may. It's not always, and it's quite strong support. This is very heavy support. If it fell through that $79, then it would probably more likely go to around $40. It could find some support at 60, but I'd say more likely that $40 mark. But right now, I've got no good news for you on here. And I said, all you need to be doing right at the moment, instead of buying, is just sitting back and waiting to see what happens. So if this down move stops before that and starts to move up, and I don't mean 1 week up and jump into it, I mean it needs to give you a sustained sort of move up and break above that high there, that $99 high, and then I would get excited about it. But right now, this is one of these wait and see to see what happens, and really don't jump in too early. And I think that's the big thing that I've been saying the last month or two on our market is be patient, because we know anything can happen on our market at any time at the moment with the volatility that we got and that unpredictability of the market. So whilst it's, I'd love you to buy stocks that are cheap like A2 Milk and go, wow, I bought in really cheap and it rises up for the next 3 to 6 months. That's not always going to happen, and we need to make sure that we're not buying things that are falling away. We're actually buying things that are actually rising. So it pays to be a little bit more cautious, or on the more cautious side. So wait for a stock to move up 10 or 20% and know it's moving up rather than guess about it. So hopefully that gets through, because a lot of people say to me, when's the right time to buy a stock, and how do you do that? Well, how you do it was what we teach people in our courses. I can't do that on a YouTube channel. All I can say to you is this stock is falling, A2 Milk is falling, so just be really, really careful at the moment. But that brings us to our next question, which is from somebody called Kate. So thank you, Kate, for sending in a question for us. She said, thanks for the weekly update, Janine. Could you please have a look at Fortescue Metals, looking at investing in this for the long term, for the dividends, and to write covered calls over? Thank you, Kate. I understand writing covered calls is great on a volatile stock like Fortescue, but you do need to understand where it's moving and how it's moving, because it is more volatile, and by being more volatile you're going to get better premiums on your covered call. So really understand that, but it's also you need to understand the direction of the stock and how it's going to unfold to write those covered calls a lot more effectively. But let's go and have a look at the chart and see what it says. So covered calls meanings you're looking at the stock not getting triggered out. For those of you who don't understand what covered calls are, I'll just share with you. Let's, for example, Kate may write a covered call at 20. There's a high there at $22. So she might write a $22 covered call, hoping that Fortescue falls away a little bit more and she gets the premium for that covered call. But while she owns the stock, it's falling in price as well, but she gets that premium. If Fortescue turns around and moves through that $22 mark because she sold a covered call on the stock, the person who bought that would want to buy that stock later at a later date for $22. Because what a call option is, or a covered call is it's the right but not the obligation to enter into a transaction at some time down the track. So the right here is to buy Fortescue at $22 at some point down the track. You're normally 6 to 8 weeks down the track. So if Fortescue goes down to $20 and you hold a contract saying that you can buy Fortescue at $22 and it's now at $20, why would you do that? So you wouldn't exercise your right to buy it at $22. You'd just let the options expire, which 90-something% of covered call contracts do expire worthless. But if Fortescue goes up to $24 and you can buy it for $22 because you have that contract, you would exercise the contract, buy Fortescue for $22, and you'd make $2 profit immediately, less some costs on that. So that's smart. Right now, I do like Fortescue Metals. I think it's looking good. It is moving up strongly. It's got a little bit of a weak spot this week, but the market has been weak today. As you know, it's been a little bit, it's had a reasonable day down today, but it doesn't mean everything's falling apart. But I do like Fortescue. It's probably maybe a little bit early for me. This is worrying me, this big dip through here, but I do like it, and we've got some issues around China and supply chain issues, etc. So it looks a bit messy, if that makes sense. So look, I'm not saying no, but I'm not saying a strong yes either, if that makes sense, Kate. So hopefully you can read between the lines. But, you know, if it does start to move up next week and moves above that high there of that $22 that I was working on, then I'd be saying yes, it probably would likely to continue to move up. But then as you're writing covered calls and you're wanting dividends, that's a different story, because obviously as you're writing covered calls, effectively you're lowering your buy price because you're getting premiums from that stock. So effectively you're getting in a better position anyway. So if you are writing covered calls, I would assume you actually know what you're doing in the market and what you're doing in as far as buying and selling stocks and protecting your risk on those. But thank you very much for answering that question, but asking the question, not answering it. I answered it for you, but I do hope you like my answer. Thanks to everybody that made comments and actually asked us questions. And, you know, really this show is for you and for your questions on the Australian stock market. And I do appreciate you putting your questions in. But if you want to have your question answered, remember the best chance to have your question answered is to publicly subscribe to our channel. And then just type your questions below. Publicly subscribe means I actually know you're a subscriber, which means next to your name there's this little red circle that says, hey, you're a public subscriber to this channel, and I always answer those questions on here. But once you do that, type your question below and I'll get to answering in the next in our next episode. Remember that here on this channel we do these Monday market reports each and every week. We also do our live stream on Tuesday nights between 7 and 8 p.m. That's where you'll see Janine and I. So remember to hit that subscribe button now and click the bell on the right of it so you know when we upload videos and go live with our show. But that's it for me for today. Goodbye, good luck and good trading.